Welcome back to Fast Market. I'm Diane King Hall. Time now for our cash tag segment. We'll be focusing in on Instacart. Stock up, but 90% over the past year. Today it was upgraded over at Needham to a buy from a hold. Their price target, $56 a share. The analyst also added shares to the firm's conviction list and thinks that Instacart can grow transaction volume in the low teens over the next 2 years. Needham has a bull case price target of $80 and says it has the potential to benefit from acquisitions. Joining me now again, our co-host Tom White, and also joining us is Landon Swan, co-founder of LikeFolio. Landon, let's start out with the view you have on Instacart and what kind of trends that you're paying attention to. It's already had a solid year, especially when you shape up, compare it to others in this space. What kind of trends are you paying attention to?
Yeah, I mean, it's up like 2x basically over the last year. And, you know, the good news for those that bought on IPO day, they bought kind of at the high. If they did, they're up on it a little bit. But it has run from 22 to 44. It was just at 50 right before their last earnings report. They had actually a pretty good report. Like revenue was up 11% year over year. They doubled their EPS estimates. But they gave bad outlook, which of course is kind of a no-no, and the stock sold off anywhere from 10 to 15% that day, and it's basically kind of been in this sideways channel, 41 to 45, since then. But when we look at the space overall, there's actually a pretty good tailwind going on with grocery delivery, just delivery in general, convenience, people paying for convenience. Across the space, pretty much all of the companies have increasing consumer demand. One of the metrics we like to look at is web visits. That's increasing on a year-over-year basis. It's about plus 11%. Now, the concern here is, though, that it was plus 21% year-over-year. Now we're down to plus 11%. But it's still positive. It's still growing, but the rate of change is decreasing. So we're a little concerned there. But you can see the space in general has a bit of a tailwind. Everyone's benefiting. Similarly, their app usage is up on a year-over-year basis, but trending in the wrong direction. So they were about plus 20% year-over-year in October. Now we're plus 5% year-over-year. So again, still growing, but if you're an investor in a company, you want to see not only growth, but you want to see the growth rate increasing as well. I will say that, just based on execution here, this company is demonstrating how to partner with people and how to make those partnerships work. I mean, they've got a new partnership with Ulta, who had one with DoorDash, but added Instacart. That's obviously going to help them. They've got a partnership with a company called Food and Dry, which is Cut and Dry, which is a food manufacturer. They can advertise their products on Instacart, maybe pushing customers to the products that they want them to buy instead. Samsung's got a collaboration with them with their smart fridge. You can order right from your fridge to have food delivered, have groceries delivered right from Instacart. Of course, their Uber Eats partnership as well. You can order on Instacart. So they're doing a lot of good things when it comes to overall vision and execution, and they have a tailwind in the space. So I think they just got a little bit ahead of themselves when it comes to the stock price, the valuation, and there was just a natural pullback when, even though, again, they beat and all the numbers looked good, they said, you know what, this might not continue at this pace. And of course, you don't want to hear that if you're investing in a growth company. And that's kind of what we're seeing. I mean, we're seeing they had great growth when you look at web traffic, social media mentions, all of that, app usage, and then it's still growing, but just not at the same rate. So I think that's what's happening here. Bit of a pullback, but again, they're kind of in that 41 to 45 channel. I think they're doing fairly well against the market. It's just that they got a big run there and they couldn't keep up. But I think it's overall a pretty strong company.
Hey, Landon, it's Tom. When you look at this company and, just the deliveries in general, we saw a little pullback in Uber Eats deliveries. You've got DoorDash in this space. Free cash flow is pretty good for these asset-light model type of companies. But when you look at that, are you seeing any peak at all in deliveries where, people are just getting constrained by inflationary pressures that, hey, I'll just go to the store myself. I'm not getting this extra charge on there. Or, you guys had bad weather, or not you guys, but LikeFolio down in Kentucky had bad weather recently. Maybe you'd see a pickup there.
Yeah. I tell you what, it's kind of that tailwind that I talked about. I think it's just like for Instacart, it's happening to kind of all of the companies. Is it was much better a few months ago. There's still a tailwind, but it's softening. And I think, obviously a lot of the stuff that you talked about is going to play into that. If people don't have as much money, we're talking about a luxury service here. You have the ability to go pick up this stuff yourself. It's just, it's a cost benefit analysis for each consumer. Is it worth going out and doing it yourself, or paying a little bit extra and having it delivered? And I think, I'm pretty optimistic on the economy. I think we're going to have a good turnaround over the next little bit, and I think that this company is going to benefit from that. But again, the data that we've seen coming in is showing us that growth is slowing. So again, this is not less usage. This is not decreased usage or decreased chatter on social media. This is a decrease in the rate of increase, if that makes sense. So it's that second order that we're talking about. The acceleration is decreasing, but they're still positive on a year-over-year basis.
I wonder, in terms of the growth rate, if some of that also has to do with, besides the direct competitors, say DoorDash or Uber Eats for Instacart, and I've been guilty of using all of these apps. Sometimes on my phone I'll delete Instacart to tell myself I'm not going to use it, and then I add it back to my phone. So guilty over here. But you have other delivery plays like Amazon or Walmart, which does its own delivery as well. Now, is some of this a crowded delivery landscape now?
Yeah, I think, everybody wants the convenience. I think Amazon kind of changed consumer perception of what delivery could be. If you can rewind mentally 5 or 10 years, it was pretty cool to get things in 2 days with Amazon Prime. Everybody was talking, you got to get on Prime, you can get stuff in 2 days. Now it's like, I want my groceries in 20 minutes. And I think that it has changed the landscape. And yes, I do think it's crowded, but I also think that we're headed, macro-wise, we're headed in a direction where everyone is going to start doing this more and more often. And the number of consumers, or, if you look at the socioeconomic conditions of consumers, the lower class are going to start using this more and more. I think we're moving in the direction where more people are going to do it. So yes, it's crowded, but I also think that the demand is there to support that, especially when you look at, 5-10 years from now, whatever it may be, hopefully sooner, where there's not drivers in these cars. Then it's just a matter of who's got the users, who's got the best app experience. So I think we're headed in that direction, and it may be a little bit crowded right now, but I think the demand is going to continue to grow to support and relieve the crowded nature of this. I think they can all do well.
I think that's a great predictor of the future, especially with the proliferation of AI and how much AI and then the autonomous vehicles, et cetera, how that will play in this space. And so who will be the biggest beneficiary? And I think, Lana, you make a great point about just habits that changed during the pandemic. And so some of this has just become habits within households. Landon Swan, co-founder of LikeFolio, thanks a ton.
Thanks a lot.
Tom, now that we have all that information, how would you structure an example trade for Instacart?
Well, I went based off of, the upgrade that we saw out of Needham today, and I looked at a strategy that we typically don't look at, but maybe it takes advantage of some upside while helping to pay for part of the bullish part of this trade. So I looked at a combo, sometimes call this a bullish risk reversal, as an example trade in here if you think the stock's going to go higher. Now, they report earnings on the 11th of February, so this trades a little bit longer in duration. You'll capture that earnings event. That might be a catalyst